Greetings children, welcome to my channel Inside Accountancy by Shakun, Accountancy Made Easy. In this video, we'll be talking about Chapter 6, Retirement of a Partner. So here starts the lesson. The contents of this video are retirement of a partner, and specially we'll be talking about the calculation of gaining ratio and the new profit ratio. There will be an assignment for you all. And we also need to understand that retirement is connected with the reconstitution of the firm. Let's understand what it is all about. So, retirement of a partner. Retirement of a partner means when a retiring partner ceases to be a partner of the firm, but the firm continues. It means that the firm continues its business with the remaining or continuing partners in accordance with the new or the changed partnership deed or the new profit sharing ratio. Retirement of a partner, it means the reconstitution of the firm. So reconstitution always happens at the time of retirement, and there are various adjustments which have to be given effect at the time of reconstitution of the firm. A partner may retire from the firm in certain situations if there is an agreement to that effect, that is, the partners have mentioned that in the partnership deed. If all the partners agree to his retirement, that is, the partners mutually consent, they give their consent for the retirement of a particular partner, or if the partnership is at will by giving notice to the remaining partners of his duration to retire. So what is partnership at will? Partnership at will means a form of partnership that arises where there are no fixed terms. No fixed terms have been agreed, or the duration of the partnership or the partnership has been entered for an undefined term. A partnership at will may be dissolved at any time by a partner. He just has to serve a notice to the other partners. So a partner may retire in all these three circumstances. Moving on. What are the liabilities of a retiring partner? According to section 32, subsection 2, a retiring partner remains liable for all the acts of the firm up to the date of his retirement. So till the time he does not retire, he will be liable for all the acts of the firm. However, a retiring partner may be discharged from his liability by an agreement between himself, the third party, and the continuing partner. So this can be done only when there is an agreement between him, the third party, and the continuing partners. Otherwise, he will remain liable for all the acts of the firm. According to section 32, subsection 3, a retiring partner also continues to be liable to third parties for the acts of the firm even after his retirement until a public notice of his retirement is given. So until a public notice is given, he will remain liable to third parties for any act of the firm. So he will have to pay compensation to any third parties because of any activity undertaken by the firm. So reconstitution of the firm, as you know, requires certain adjustments to be made in respect of change in profit sharing ratio, treatment of goodwill, treatment of the various accumulated profits and reserves which appeared in the balance sheet, the revaluation of assets and reassessment of liabilities, and the preparation of partners' capital account. So at the time of reconstitution, whenever there is a reconstitution, we need to study about the effect of all these circumstances. In this video, we will be talking about the change in profit sharing ratio. That is how we are required to calculate the gaining ratio as well as the new ratio. So calculation of gaining ratio and new ratio, which has certain cases. Case 1, when one partner retires and the new profit sharing ratio among the remaining partners is not given. So what happens here? When one of the partner is retiring and the new ratio is not given, in that case, new ratio can be ascertained by striking out the share of retiring partner. I will take an example to make this more clear to you. So let's say there are three partners A, B and C sharing profits in the ratio of 3:2:1 and C retires from the firm. This is the information that may be given in the question. So no new ratio is given, only the fact that C is retiring is given in the question. So how do we calculate the new ratio? The new ratio can be calculated by striking off the share of the retiring partner in the old ratio. So the old ratio was 3:2:1. Out of this 3:2:1, we have struck off the share of the retiring partner. So what is left? 3:2. So 3:2 is the new ratio. Now in such circumstances, when we need to calculate the gain, how can we calculate the gaining ratio? We know that the gaining ratio is always equal to new ratio in this case. So since no other information is given, our gaining ratio and new ratio will be same. Therefore, the gaining ratio will also be 3:2. Moving on to the second case, when the remaining partners acquire share of the retiring partner in a specified ratio. Now this is a case where the gaining ratio would be given in the question. So we have the gaining ratio with us. After we calculate the gain, we can easily calculate the new ratio by adding it to the old ratio. Let's understand this with the help of an example. So for example, A, B and C are three partners sharing profits in the ratio of 5:3:2 and B retires. His share is taken by A and C in 2:1 ratio. So this is the information that is given to you in the question. Okay. Now you have to understand that what is this question talking about. First, the old ratio is given, that is 5:3:2 is the old ratio. It is given that B is retiring, and what is this 2:1? Basically this 2:1 is the gaining ratio. His share means that the retiring partner's share. What is the retiring partner's share here in the old ratio? The retiring partner's share is 3/10. So his share, B's share, is taken by A and C in the ratio of 2:1. So this 2:1 is the gaining ratio. So gaining ratio is given to you in the question. Now we need to calculate what is the gain of the continuing partners, that is A and C. So A's gain will be equal to B's share because his share has been taken in the ratio of 2:1. So B's share, what is B's share? That is 3/10. So 3/10 into the gaining ratio, that is 2/3, gives us 2/10. So A's gain is 2/10. Similarly for C, C's gain will be equal to again B's share, that is 3/10 into the gaining ratio, his gain, that is 1/3. So his gain amounts to 1/10. So A's gain is 2/10 and C's gain is 1/10. Why are we calculating the gain? Because we need to calculate the new ratio, and the new ratio can be calculated by adding the gain to the old share. So new share is equal to old share plus gain. So A's new share will be equal to his old share. What is A's old share? A's old share was 5/10 plus his gain. His gain was 2/10. So 5/10 plus 2/10 is 7/10. Similarly for C also, we add the gain to his old share, we get the new share. So the new ratio between A and C, the continuing partners, is 7:3. This was the second case where the gaining ratio is given. You calculate the amount of gain and then you add it to the old ratio to get the new ratio. Coming to the third case, when new profit sharing ratio is given. So this is the easiest case. In the question, you will be given the new profit sharing ratio. So since old ratio and new ratio both are given, so gaining ratio can be easily calculated. Let's take an example for this one as well. So for example, there are three partners A, B, C sharing profits in the ratio of 5:3:2, and the new ratio between A and C is given as 3:2. That means that B is retiring. Old ratio is also given and new ratio is also given. So old and new both are given. So what is gaining ratio? Gaining ratio is always equal to new minus old. So gaining share of A and C will to new share minus old share. So A's gain is equal to his new share. What is A's new share? That is 3/5 minus his old share, that is 5/10. 5/10 or 1/2 you can say. So this gives us 1/10. So A's gain is 1/10. Now C's gain is equal to his new share, that is 2 by 5, minus his old share. C's old share is 2 by 10. So 2 by 5 minus 2 by 10 gives us 2 by 10. Therefore, the gaining ratio between A and C is 1:2. So since the new ratio was already given in the question, so we do not need to calculate the new ratio again. So these were the three cases which were relating to the calculation of gaining ratio and the new ratio. For your assignment, you need to solve question number 1 to 12, which is based on this concept from T.S. Gariwal. I hope the concepts were clear to you. We have talked about the retirement of a partner, what it actually means, the liabilities of a retiring partner, calculation of gaining ratio and new ratio through various cases with the help of examples. I hope the concepts are clear to you. If you liked my content, please show some love, like, share and subscribe to my channel. If you have any questions, contact me on my email ID. Comments are also welcome, and this is Inside Accountancy by Shakun signing off. Thank you.